All right, welcome everyone. So I hope you guys have all learned a lot throughout this session and this week so far here with David and Anka and everyone over there. So I'm going to be talking about one of my favorite strategies here, and I'm going to show you how I use a specific Fibonacci tool to help with timing the market. So a lot of times, traders will be looking for things like bull flags, bear flags, reversals, things like that. And you might have the general direction perfect. You might be looking exactly the right direction, but at the same time, your timing might be a bit off. Either you're too early or you're too late. And one of the tools that I like to use is a Fibonacci fan to help me with nailing down exactly where that timing is going to be for a setup. So when we're looking at things like, crude oil or the Nasdaq futures, we see these core setups happening throughout the sessions. And I'm going to show you a couple of live examples that I had in my trading last week, as well as here today, that I did showing them to other traders so that you can see how these work in real time here. So let me pull this over and change my slide on over here. Hold on a second, guys. So what are Fibonacci fans? So there's a lot of different types of Fibonacci tools out there, you guys. How many of you use Fibonacci? I was a purely technical trader for the first couple of years when I started trading. There was very little that I had on my screen, and I would play around with a lot of different indicators, things like the commodity channel index, RSI, Bollinger Bands. I kind of tried them all out, but there was only one specific set of indicators that I still use 25 years later, and those are the ones that are based on Fibonacci. And with my background, I come from a background in the arts and archaeology and anthropology, and really a lot of studying human behavior. And it's so interesting how the markets are just a reflection of our own psychology. And so when we study things like migration patterns or we study things like COVID infections, they look exactly like securities. You can track COVID infections the same way that we can track different markets. I'm actually going to show you an example of that here a little bit later on. Just because it's really cool that we can take the same patterns that we look at in stocks, in futures, in Forex, and we can apply them to basically everything that applies to human behavior. Now, with Fibonacci fans, and all of these Fibonacci tools like extensions and time extensions, these are all universal indicators that really work on all things related to human psychology. So I'm going to show you here, as we pull them over, a couple of ways that we apply these tools. I'm just going to pull up a chart here. And let's see, I'm going to pull up our one second, you guys. I rebooted my charts and the historical data got a little corrupted here for some reason. So I'm just going to pull it up from my other computer here. There we go. That's a little better. So when we look at different Fibonacci tools, this is NinjaTrader here. And NinjaTrader doesn't have every single one of the Fibonacci tools that I use built into it. So I have an add-on for indicators that I use with NinjaTrader. And it's called Trade Tracker Pro that I developed to add things like the Fibonacci fans and Fibonacci arcs onto your charts. So I'm going to go and pull up the Nasdaq. This is one of the markets that I was trading here this morning, and show you how that applied here. One second, you guys. Screen share, hold on. All right, so you should all see a 3,000 tick chart here of the Nasdaq. And I'm going to drop this down to a smaller time frame. We're going to look at the 200 to 500 here from this morning. So when we're looking at trading and using these Fibonacci fans, the way that we go and apply them, as I scroll on over here, add a little bit more data on here. Here we go. Is we're looking at taking movements from basically a low of a trend to a high of a trend move. So this is the very basic way that you would go and you would apply it. You would take, for example, the low here, and you would look at that first initial move up. Now, as you can see here, the retracements on this particular one aren't really showing me much. And this is one of the things that is frustrating for people when they're dealing with Fibonacci tools, is that if you don't have them applied correctly, the way that they appear on the chart is not going to be as useful to you as it is with a little bit of manipulation. So this is what it looks like this morning based upon this first initial move. Now, what I did with this is that because that initial move off of the low was so extreme, here to here, we have a move that is stronger than average momentum. So when we're looking at stronger than average momentum, what that means is that we are looking from a movement where there's very little overlap from one bar to the next within that trend. An average trend move tends to have more chop to it. So you'll see more of these sections where there's a lot more overlap from bar to bar. In this case, we've got a line chart. But in a stronger than average trend, you might only have like one little section that has that, or they'll be punctured with small little pauses, but then overall really strong momentum moves. So when we're using Fibonacci fans, if we have a move that is very, very strong off of a low to a high, and we just attach our fan from that low to that high, the support levels aren't going to work as well. Instead, what we're going to do is we're going to take that fan, we're going to take it from the low and move it over to the next high. And what that does is it shifts the entire momentum of our fan. So this is a little bit of an advanced way that I will go and apply these Fibonacci fan tools so that they do work in every market and on every time frame, but we have to look at momentum. And when we're looking at different Fibonacci fans, momentum is the one thing that often gets overlooked. So if we're looking at back and forth movements like this, when we want to apply a fan to an impulse move, such as the low to the high here, this impulse move needs to be average momentum to slightly less than average momentum. If it is substantially stronger than average momentum, the fans that you go and attach from that low to this high simply aren't going to serve as strong of support. You'll see these punctures of these support levels happen like this here happened this morning. So what we want to do is we want to look at momentum on corrections whether we get double taps, double bottoms. If we have a double bottom, for example, over here, we can go and we can shift our fan from this low to that high. And that's going to give us really good support levels for our Fibonacci fans. If, on the other hand, we have a double top, let's say it comes from here, comes on up, pulls back, comes back up, retests it, we can go from our low to that second high. And that is going to give us our appropriate fan levels for support. So fan tools are things that often frustrate traders because they see so many examples of where they don't work. But let me show you how it can work from a very core perspective. And then I'm going to come back and show you some more of these examples of where we do these adjustments to make them work even better for us. So let me clear this here. And I'm going to open a platform here. This is going to show you a lot of the trades that I've taken over recent weeks here and levels that are based upon Fibonacci fans. So one of the ways that I work as a trader is that I like to keep copies of everything that I'm doing, things that I'm looking at, things that I'm trading. And it's really important to develop that record or that trading journal of how things have happened in the past, to have a good idea of how things are going to happen in the future and where to go from there. So I have a Slack channel that I keep a lot of the setups and strategies and things that I'm studying on. And you'll find that by going back and studying things like these Fibonacci fans, you're going to find trades that work over time of making adjustments so that you have not only your core set of rules for a very basic Fib fan application, for example, low to the high here, giving us the support levels, but also you can develop rules for variations of how the momentum is playing out and how different trends are forming so that you can use these Fib fans in other scenarios that might not look like the pure core way of trading them. With the core Fib fan, we are going from that low to the high. In this instance, our momentum is still a little bit stronger than average, but we do have a pretty nice pause or correction here in the middle. So I will go and add these fans on here to begin with. But if this went and pulled up here and did a retest, what that would do is it would help create a zone of support that would be of interest to me for buy setups. So for example, that Fib fan based upon the low to the high is going to give me good levels to be watching for support levels, which is really helpful even if I'm on the short side. Let's say I traded a reversal off of the highs and I'm looking for different support levels or just places to look for bounces and things like that. In this case, this was a shorter term bounce where I was looking for continuation on the downside, but I wanted to see, hey, where could a bounce happen before we got that continuation? So on the smaller time frame, I took the low to the high here, and then I also took this low to the high here to watch for those different levels of support. Let me go back and show you some more that are kind of a more standard application for Fibonacci fans here. And then I'll show you some more of the versions of the variations as well. So here's another example here. And what you can see is that we have this initial low and an initial run here. And so far the momentum on that is pretty standard, pretty straightforward, average momentum. So the original fan that I used was based upon that low to that high. But what I was watching for a buy setup in this example was something where we would have a two-wave correction where I could get timing for more of like a cup with handle type of scenario or an inverse head and shoulders. And what you'll notice is the momentum here coming off of that high. It's a straightforward, nice, strong momentum move down. And then instead of coming up and pausing here before we get that secondary pullback to do a nice little two-wave correction for continuation on a pattern that I call a phoenix, what you'll see happening is that it went to a slightly higher high. So we don't have that nice base of congestion here that we would typically look for a phoenix. A phoenix setup is basically just any setup where you're coming off of the lows, you get this counter trend move, and then we get a continuation. It could be the handle in a cup with handle. It could be the right shoulder of an inverse head and shoulders. And with our Fibonacci fan, the core way that we apply that fan is we go from that low to this high here. And then as it comes back, the 76.4% Fibonacci fan is what we want to look for timing that continuation trade. That's where we want to see our buy setups happening and getting really strong momentum move coming off of that 76.4% Fibonacci fan. When we have scenarios like this, where it doesn't give us just that standard two-wave correction, we need to look at alternate ways that we can apply our Fib fans and still have them work strongly in our favor. So with a Phoenix, for example, that is doing a two-wave correction, our Fib fan goes from here to here. If our Phoenix is coming up and we see that slightly higher high before we get our secondary correction, the way that I'd make my adjustment with my Fibonacci fan is to go from this low to this high. And that is going to give me the strongest zone for 76.4% buy setup. Now, the thing with Fibonacci fans is that they're not just providing us like these support or resistance levels in a trade, they're also helping us understand the time development that is taking place in a trade. So we're looking not just at, hey, where is a pullback going to stop? Where is it going to end its correction and have a good chance to bounce? But also, how long is it going to take before it can bounce? So we're looking at a time aspect in addition to a price aspect. And with typical Fibonacci levels like Fibonacci retracements or Fibonacci extensions, you're not looking at that combination of price support and resistance as well as do or die points where you've got the time support and resistance aspect, which any of you that are option traders know is incredibly important, because you need to know not only like the direction that something's going to go, but also how long is it going to take before it finally starts to take off and begin to go in the direction that you're looking for. So with Fibonacci fans, they offer us that additional bit of information, not just where the price support and resistance are, but also how long of a time development it's going to take for that movement to begin. Now, as things are coming into levels like that 76.4% Fib fan, that's a level that you want to go and drop down and look at a smaller time frame. So you can see we've got pretty small time frames listed up here already. We've got a 2-minute chart and a 50-tick chart. Usually I will have these charts up because I am looking for a setup that is based on a much larger time frame. So it could be, for example, a 15-minute chart or a 500 tick or a 2000 tick or even a 20,000 tick chart. But I'll drive down to these smaller time frames to help me with timing and building positions on those bigger trades. And that's what I did today as well. I'm going to go back and show you again that Nasdaq here. In another couple of minutes, we're going to look at some of the smaller time frames in building the position as well, and how the Fibonacci fans played a role on the smaller time frames. I was almost exact with my timing on the lows today in the market. I traded both the Russell and the Dow off of almost the exact low here today. And the NASDAQ is a continuation coming off of those lows. And they all had to do with Fibonacci and the time developments off of those. And the Nasdaq had the best setup as far as we're coming right off of fib fan support to really take off and get going. But I'm going to need to drill down to a smaller time frame to show you that. Clear this here. And show you a couple other applications here. Fib fans are also great in helping you understand when something isn't getting going like it should. So for example, this trade here on oil, I was looking for shorting opportunities for where this would turn around and fail on me, but we had a really strong two-wave movement up again. So with that two-wave movement up, what I watched for was how did it react off the 50% fib fan, and how does it react off of the 76.4% fib fan. With fib fans, when you're looking for something for a breakdown, what you'll find is that they often start to hug those Fibonacci fan levels. So like the 76.4 becomes a really strong zone of support that once it breaks and gives way, it offers triggers on the short side. So we can use it not only for timing setups, for a bounce, but also for understanding when something is not doing what you might expect. So if this is our initial upside move, for example, and we have a 76.4% fib fan here, it would actually be a little bit further down here. What we're going to be looking for is that on the pullback, we want to see this initial low hold at either the 50% or the 61.8% fib band for your two-wave correction. And this applies to any bull flag or bear flag, as well as the Phoenix and the Avalanche reversals. This is an Avalanche right here, for example, where you're looking for a breakdown. This is technically a Phoenix here, which fails to get going. And what we would expect to see happening is that our setup would take place coming off of that 76.4% fib band. And you would want to see pretty strong momentum coming off of it. If it does do a secondary correction, you want to see it hold that support and ideally do what we call a no touchy, where it wouldn't even touch that fib fan on that secondary pullback. Basically, you're creating an inverse head and shoulders here that then would offer the continuation. So if we look at our example up here on oil, what you can see happened is that it had the two-wave correction. It came into that 76.4% Fibonacci fan, but when it came back and retested it again, and you get that inverse head and shoulders timing, which basically puts it right in these zones here, it can't take off. It should have soared right here if you were going to get strong continuation on the upside. So what our fan does is it shows us that this is a do or die point, that it really has to be gaining momentum as it is coming off of that level. And if it's not, and let's say I did buy this, then if this continues to trace up here, I don't have to keep a stop under this level, which would be a traditional stop level for a buy setup. Instead, I can trail my stop up along that support level so that when this breaks here, that can get me out of the trade. And many times it can even reverse my trade for me. Now, let's say I was continuing to look for this on an upside move, and I thought that the larger time frame still looked great for further upside. What I would do at this point is, since this move is so strong on the upside here, I would take my fib fan from this low, move it over to the next high, and then that's going to give me the 76.4% fib fans over here. So what that could do is that could create a larger two-wave correction and give me another do or die point where the market would have to take off and it would need to get going at that specific point. So if it breaks that point again, it also confirms that, hey, I can go ahead and short this. So larger time frames are, incredibly important, but the smaller time frames work really well as far as helping time what's going on those larger time frames. So let's say this little graph here that I drew on the bottom, let's say this just kind of slinks up along here. What should happen is it should follow that pink momentum and really take off at that point. So if it's kind of creeping along here, you might still see higher highs, but they will tend to be traps. And as soon as that breaks, you can use that as your trailing stop or even initiate a short position coming off of that. Can I show you an example of trailing stops using fibs? I can actually do that, showing you how I got out of my trade here today and how I managed that trade here today too. Let me show you another example quick. On the Fibonacci fans, here is another recent one. This is our Nasdaq. Now, what you'll see here is that this is a line chart. So I often have to switch and move my line charts and change them from a line chart into a candlestick chart to actually nail down where that low and that high are. So in this case, the first move up where I would have my fans initially would be from this low to this high, which would put this as the 76.4% fib fan, but we only have one strong momentum move on the downside. What we need to see in a bull flag or a phoenix is that our upside move should have a correction that is at least a 1-to-1 ratio. Ideally, if this upside momentum is stronger than average, your correction is going to be 2-to-1 or up to 3-to-1 before it continues on the upside. So if this is your upside move, we'll call this A. If this is B, and this is C, those are going to be our core zones of where setups are going to take place. This is a little bit too early though. So it's not quite that 1-to-1 ratio. It's a little bit shorter. That tells me that even though I might be coming off of fib fan support, going from this low to this high, it's probably not going to break that previous high as easily. It's also more than a 50% retracement from that high too. So what we need to see is a secondary correction. Well, in order to make that Fibonacci fan work for me, I need to go and take that low and then hook up my fan to the next high. And that's going to give me my 76.4%. That is going to be more ideal for a bounce in this particular case. So here, you would have to go and change over to a candlestick chart so that you see the absolute highs and absolute lows. You can use line charts, but what's going to happen is that your fib fans might be a little bit off. So you might be missing out on some vital information if you're just relying upon your line chart. Here's an example showing a fib fan that I had based upon earlier support and resistance levels, how they then go and they can serve as support and end up breaking down. In this case, we have an avalanche breakdown. Let me go and pull up the charts from the end of the week. And then here today, I need to go down to a smaller time frame here today. Actually, I'm going to pull this from my other computer here and show you the fib fans that I used to trade coming off of the lows here this morning. And then I'm going to show you the fib fans that we used to time the sell-off at the end of last week. And this was something that I did live. So I showed them, my traders, during our noon class, our noon session, exactly how we needed to adjust our Fibonacci fans to time the breakdown at the end of last week. So let me Should pull up here today. And again, if you guys aren't tracking your trades with like a trading journal or something like that, I highly recommend that you start doing so, because you're going to learn so much. So what I was looking at was, again, coming off of that low. So I showed you earlier how I took the fan from that low and adjusted it here. But then I also did the same thing on the smaller pullback in here. So I was looking at this two-wave correction coming in here as well. And when I went from just this low to this high, there's not much for pause action on that upside. So what I wanted to do was go to the next high over, because this is stronger than average momentum. So I needed to go to that next high over to attach my fib fan to that level to give me my support. Now, there's a little bit of a difference between the micros and the Nasdaq, but what I saw was that this started to shift. We had a nice three-wave move down here, and we started to shift as we were coming into that 76.4% fib fan. My first initial buy setup this morning on the Nasdaq was as this Phoenix here broke. So what we're looking at this morning was that this is a larger Phoenix pattern where we have the main downside move, we have an upside move, and then we have a correction. So this becomes our two-wave movement for our upside move. And that channel is really gradual, which opens the door for what I call a shallow Phoenix. We want that, again, that kind of 1-to-1 ratio here. And since we have a slower overall beginning movement and then a slower gradual movement here, it means that the odds of a really strong break coming out of that low have very high probability to them. So a shallow Phoenix looks like this. You have a movement coming off, you get a two-wave correction like that, where it's really gradual. And then you get a two-wave counter move. That counter move has to have a 1-to-1 ratio. So you're looking for basically a shift in momentum here and then again here. Your fib fans, you can go from there to there and look at support, but we can also look at smaller levels of support with the smaller fib fans as well to help time. When you get to that 1-to-1 ratio, that is the ideal zone to begin looking for a strong buy setup. So with the double top in here, this is how I adjusted my Fibonacci fan. And I went and did the same thing in here on a much smaller time frame. Let me see if I grabbed a screenshot of that one to show you guys. I did not, but I will put it on there on 100 tick chart and show you the details of that smaller movement. And then we'll come back to this. And if there's something you guys want me to take a look at here today and show you how I would apply the fib fans in one of the current markets, go ahead and post that in the channel and we can take a look at those too. So here you can see how that bigger fib fan played out. And this is what I used for adjusting with stops and trailing stops and buying into the position, adding into the position. So I also look at things with regards to wave counting. I count more in waves of twos than I do waves of threes. So I look at two waves up, correction, two waves up, correction, look at smaller two wave up. This was the zone that I based my levels for targets off of as you're coming back up into those Fibonacci fan levels. And then looking back at where different levels of support and resistance are as they're coming into those fan levels. So what you look for when something is going to start to fail is when it starts to hug a fan zone. If it has for example, a slower movement up here. Let's say this pulled like this, so that this high is instead closer to more of like that 1-to-1 ratio between the lows. That's usually going to tell me that you're going to get a breakdown there. So we had that same thing happening up here. We have our two-wave correction, and then you've got that kind of equal distance in there. This is what took me out of the trade this afternoon. I used the zone up here with the channel break to go ahead and protect a lot of position, but then I added back into it when we had that smaller Phoenix again in here. Now this Phoenix, we can go and we can add our fans to as well. We can go from that low to our high here. Let me clear this so you can see what it looks like underneath there. So this is what I did for adding back into this position after taking some off with my measured movements coming up. Let me see if it goes back and shows you that resistance. I don't know that I've got enough data on here yet. No, I'll make it a little bit bigger. Pull up like a 2000 tick chart here. Actually, that's still pretty small. The setup that I took was actually based upon, I think it was like a 40,000 or 60,000 tick chart. It was based upon trend exhaustion on the larger time frames. And so the target levels that we look for, so we're dealing with these like downside movements here. I have what I call different levels of retracement that are really important. We call them T2, T3, T4. Basically, T4 is looking at this bigger megaphone. T3 is when you're looking at like the channel breakdown zones. So those are just different levels of resistance that I was looking at. This congestion over here, which is kind of the middle of this continuation move on the downside, was corresponding with that little baby avalanche that we saw as it was hugging the fib fan support over here. This was what we call the T2 level of resistance, or T3 actually, level of resistance, where you're getting the channel break and then the move back up into that resistance zone. That's T3. So this level of resistance, and then over here, you have your zone of congestion again. And you can look at Fibonacci retracement levels, you know, the overall trend on the downside. Where do these levels line up with the Fibonacci retracement levels as well? So this took me out of the position over here. With the three-wave correction, this created a bigger Phoenix. We call it a mega Phoenix. And as you can see, the fib fan has again served as support here for the continuation move. Now, because this momentum was so strong on the upside though, for the continuation move into the end of the day, the other thing that I was looking for was our time development with regards to these lows here. So your typical shoulder is going to have that pretty even spacing, which you can see happened here. But since we have that higher high here, I was looking at fib fan levels, not only based upon that initial fib move that I showed you here, where we saw it holding the current levels, but also going and looking at a maximum zone of adding the fib fan here. And that would give you kind of a bigger zone of support to watch in case we didn't get a continuation set up here. This could have easily gone and created like a two-wave correction like this, for example, to offer up on a continuation in another time frame and another market. Our market here today, we were at such strong levels of trend exhaustion on the larger time frames that it was likely that we would see a really nice follow through on our upside movement. So I wasn't looking for a larger Phoenix to happen. I wanted to see a really strong bounce that was stronger than the overall downside movement. But in a typical more rounded low, versus a V bottom low, we would get more of that handle formation forming over here. So that smaller time frame is the 200 or 100 tick. I'll show you the 100 tick here. Keep forgetting I need to add more data here. It doesn't like to go back and show me all the way over there. Oh, it should. I don't know why it's not going back far enough. Well, let's see. Well, it's just being tricky here today for me. So the fan program in Ninja, Mike, is one that I developed. I do have it available as a download that you can add in. It's called Trade Tracker Pro. And so these additions that you're seeing here with the Fibonacci fan and the Fibonacci arc, I paid a developer to create it for me. So you can purchase it at ToniHansen.com. And again, it's called Trade Tracker Pro. Let me see if I got a link for you guys here quick. Hold on. If you email help@ToniHansen.com, then Sarah can get it. Oh, here it is. I got the link. Copy. It's just ToniHansen.com/trade tracker. Let me put that in the chat box here for you. There you go, Mike. So it's just a download that you'll install and it'll put them onto your charts here. It does you can tie in your alerts to it as well. You can trade based off of it also. I usually do manual order execution. I don't attach my trade orders to the actual fib fans, but you can do that. I know some of my traders do choose to do that. Well, let me see. And go back to that one in here. Show you the Phoenix in here. So our pattern names, you guys, this is the Avalanche right here. And again, hugging that support, when it breaks that support and you have a really strong momentum move down, that's how we can use it for trailing our trailing stops. I added onto this position using this little Phoenix in here. So you can see that if I just went from this low up, that's a really, really strong momentum move. It wouldn't work very well to have my fib fan attached like that. What I need is to go further back. So I need to use this lower low over here and then go to that high. Now, let's say we didn't have a lower low over there. Let's just say the move started here, went up. Then what I would need to do is I would need to go from here to here. And that would give me my fib fan support. So with the double bottoms to start with your low on your right hand side or your low on your left hand side and then go to the high. If it's a double top instead, then you'll want to start with the low and then go to the second high. And that is how you would attach your fib fan in that case. So it gives me not only the timing that I need, but it also gives me my price support. So adding into that, I don't have to keep a trailing stop on the rest of the position under this low. I can trail it under that fib fan, because if this doesn't get started and get going and it comes in here and starts basing along that support, then there's a better chance what's going to happen is that this is going to create essentially a head and shoulders in here. And this would create your smaller little avalanche for a breakdown. So the great thing about using your fib fan for timing these is that even if the trade doesn't work out, your Phoenix doesn't work out, look at where your stop is going to be. You'd stop out here you'd be entering it about here, you're basically scratched on the position. So it's very, very good at limiting your risk when used properly. Now, a couple of things, you guys, make sure you note that this upside move and then the correction, your correction has to be at least a 1-to-1 ratio to the upside move. So if it's shorter, like here, it's not developed long enough. So we want to go and look at something that is going to give us more of that 1-to-1 ratio. So a setup even in here could be a little bit early. I built into this position down here. I entered it based on a smaller Phoenix that was taking place in here. Let me go and grab that and show you that Phoenix. And then I do want to show you the trade from the end of last week too, and how we used fib fans on that one also. So here is my initial entry this morning. And I took a pattern that's called a megaphone. We had 3-wave trend exhaustion here, and then we had a shift in momentum. We saw a break in this downtrend channel, and then we saw the shift happening. So one of my favorite setups is basically a shift like this, and then it comes up, it hugs the upper end of the channel, and then it takes off. So what I was watching was, hey, it's hugging the upper end of the channel here. So I put my fib fan from there up, and then I also looked at it as the adjustment to that secondary level here. I'm looking at the distance between the lows here and the lows here for my timing. And then I'm building into a position on that. Hold on while I grab a drink really fast, you guys. This COVID lung inflammation is no joke, you guys. It's crazy. Let's see here. Grab my pen again. There we go. So on this particular position here, the timing aspect was a little bit early based upon that larger 1-to-1 time frame that I was showing you. So on this move up here, I took partials off and then added back in with the retest here. So when we're dealing with this Phoenix setup, that 76.4% fan on that smaller time frame went right along here. So this is just that retest of that Fibonacci fan level that helped trigger that bigger and stronger continuation move here. Now let me go and show you the live trade at the end of last week that helped time the reversal for the short side. So I'm going to pull up charts from my live Zoom class and show you what those look like. So the setup that I was looking for on, I believe it was Thursday last week, was for this to create an avalanche. So an avalanche is just the opposite of our Phoenix. Our Phoenix takes place, it's just that first continuation here on an upside move. It looks like a bull flag, but it's the first pullback in a brand new trend. So an avalanche is just your first correction in a brand new downtrend. So what we were looking at was, hey, where could this continuation take place on the Russell on the downside? Now, we did need to make sure that we had, a double correction. It needs to be longer than the pullback. This pullback was substantially stronger than average, though. Look at the upside move. The upside move was stronger than average. It had mostly these impulse bars with very small corrections, but the downside move was even faster. So when we apply a fib fan from that high to this low, our fan levels aren't going to work that well. for continuation moves on the downside. What we needed to do instead was take that same concept and go from the high here to the second low. So the same thing that I've talked about here. So what we were looking at was, hey, this is a fake breakdown, because when we apply the fan from the high to the second low to create that more average trend move, we didn't have any 76.4% fib fan resistance here. We also had an issue with regards to the volume. Ideally, on an avalanche, what you want to see are 2 consecutive triangles of declining volume. You can see here that I crossed out this volume spike. We don't want to see that volume spike happening. We want the volume spike to be over here, ideally, when we're getting a 2-wave correction for a continuation move down. So even though volume spiked again on this breakdown, there's a better chance that that was a fake break because it wasn't working with regard to our fib fans. So the way that we made our adjustment on Thursday is, and again, we did this live, I went and I took the fib fan there and annotation, and we moved it to that second low. Now, what this did was it showed us, hey, this high is hitting, or right around where that 61.8% fib fan is, and that's good. So we want, our bounces to hit at 50 and 61.8%. And then you can see that I circled this zone right here for where our trigger should happen for a real continuation on the downside. And at this point, what we are also looking at was distances, between the lows, and taking our Fibonacci time extensions and adding that as well. So you can see that this high here lines up with that basically 200% Fibonacci time extension. If you're on a NinjaTrader, it will read as 300%. If you're on like TradeStation, it will read as 200%. It's just the way that they label them is a little bit different there. So we were looking right at that zone for our short setup there for Friday. And let me show you what happens here. Go and grab the continuation of it. Gotta grab Friday's chart. Check this out, you guys. Right at that exact spot we were talking about. Right at that 76.4% fib band based upon the adjusted fib band. And then our fan is serving as support and resistance levels for continuations on the downside. That entire move on the downside, we saw the fib band serving as support and resistance levels. So in this instance, we were looking for a much bigger continuation on the downside, not just kind of the smaller support levels. We were looking for continuation patterns. A lot of times though, this zone here with the 3 lows can serve as a reversal zone. So if the larger time frames weren't so favorable for a downside, this would have been a good reason to go ahead and exited the position, because you're dealing with your support levels over here, and you're dealing with the fact it already had a 2-wave, nice measured move on the downside, and then you've got a shift in momentum there. In this case, we just used those levels to build into positions on the downside to continue with the trend movement. But we used those patterns to help protect partials and manage the trade as it's moving. Now, I mentioned that, we can use the same type of things when we're investigating basically any market. So look at how that previous chart looked, and look at how the active cases in COVID play out in Brazil here. Here's our avalanche. So you would take your Fibonacci fan from here to here, and that would give you your resistance zone to then watch for short patterns to take place. Now, when we were looking at heading into the end of the year, I said, hey, if these COVID charts were a stock, I would be buying them. And sure enough, that's what we ended up seeing happen. Now that primary pattern that we saw take place for the market coming off of the lows this morning in the Nasdaq, notice that how that pink one here, that's what I would have liked to have seen, you know, to give you a phoenix for continuation. We don't always get a phoenix coming off of a low. Sometimes it just goes into that momentum shift and turns around. But if you're taking your fib fans, you go from there to there, and then your 76.4% fib fan. And this is my all-time favorite setup, is when we get the shift and then the phoenix and then the buy. And that's exactly what we saw happening this morning on the Nasdaq. All right, you guys. So I hope you learned a little bit about fib fans and some of the more intricate details of using fib fans here today. I am a little bit less prepared today than compared to normal, because I'm dealing with still trying to get over COVID. You know, we spent 2 years totally avoided it, wearing N95 everywhere, and then my kiddo brought it home. I can't exactly protect myself from my kiddo. But I love that I get to share live examples with everyone and show you how things work in real time, and how, you know, a lot of people get frustrated when they're looking at things like fib fans and, you know, different Fibonacci retracement levels, because they're like, oh, they're so arbitrary. They'll work here, but they won't work here. The reason that they don't work in certain circumstances is just because you don't have a full enough understanding of how they work, when to apply them, when not to apply them, how to make adjustments, what adjustments are actually logical and stand the test of time versus which ones you might be trying out more arbitrarily. And when you're developing a system, yeah, you're going to be taking guesses. Hey, if I do it this way every single time, how does it work? Just because it worked this time, is it going to work every other time I see the same situation? Hold on a second, you guys. This is showing you the wrong chart. Here's the one that I need to show you. So I have a class that I did on a Saturday. It was a multi-hour class, and I went over and then I extended it into the next week. And it goes over how I developed as a trader and the different steps that I took. Sorry about that, David. Use this link here, ToniHansen.com/generate. Yeah, not the fan one. And it was a live class, and then I did live sessions throughout Monday through Thursday of the next week, every day for an hour, to show how we applied them every day. And it goes over using the growth mindset as a trader, different techniques that you can use to improve your trading, and then showing you very specific strategies that I use for trading, showing you my favorite strategies. And they do use Fibonacci fan tools in developing the strategies, but not only just the fan, but all of those things working together. You know, we talked about time development to a degree, but there's many more things than time development and and momentum. Scott, he's so hilarious. He's like, you always say you're going to do 1 hour class, and it ends up turning into like this big, huge thing where you just keep giving more and more and more examples. And that's true, because I like you guys to see how things play out live, and to show you many different variations as possible. So this class was ended up being, gosh, like 4, 5, 6, probably like 7 hours. It is $100. And I like to make all of my courses and everything, you know, very affordable for the average trader, and for you all to see how things play out live. So take a look at this. I hope you check it out. You'll get to learn more like you saw here today, but a lot more than just here in today's session. And again, that link for the trade tracker, if you have NinjaTrader, it's just ToniHansen.com/trade tracker. And again, very, very affordable. It's $79, and you can use it on any single market. I didn't get to a lot some of the other markets that you guys wanted to take a look at. But if you go to ToniHansen.com, you'll see a sign up too for Forward Focus, which is every Friday. And I do a live free market analysis every Friday for an hour. And we take a look at, where things are right now and what to look for in the weeks ahead. All right, David, thank you for having me here again.
All right, thanks, Toni. Great presentation.
I always go for so long, don't I? I'm like, hey, I could just keep talking.
Oh. Yeah, but yeah, lots of good info. So
okay, great. Some of your questions, you guys, I'll stick around here and answer the questions here in the chat, but I'm going to turn this over to David so he can head on over to the next awesome speaker that he has lined up here for tonight.